Before we get started, a very important disclaimer. I am not a licensed financial advisor, and this presentation is for educational and entertainment purposes only. The information in this video is based on my own research and experience, and it should not be considered as financial, legal, or investment advice. All investing involves risk, including the potential for loss of your principal. Please do your own thorough research and consider speaking with a qualified professional before making any financial decisions. Your financial situation is unique, and any action you take upon the information in this video is strictly at your own risk. Alright, let's talk about that moment. You've decided you're going to do it. You're going to start investing. You pull out your phone, you open the App Store, and you type in stock trading. And then it hits you. A wall of options. Robinhood, Webull, Fidelity, Schwab, M1 Finance, E-Trade. The list goes on and on. They all have flashy logos and promise you the world. Commission-free trades. Invest with $1. Take control of your financial future. So you pick one that looks cool, maybe the one your friend mentioned. You sign up, you link your bank account, you buy a few shares of a company you've heard of. And you feel that rush. But then a few weeks later you start to feel lost. The charts don't make sense. The news feed is overwhelming. You want to know if you made a good decision, but the app gives you nothing but a simple green or red number. If that sounds even remotely familiar, you are in exactly the right place. Because the dirty little secret of the investing world is this. The app you choose is one of the most important financial decisions you will ever make. It's not just a tool. It's the lens through which you see the market. It's the gatekeeper to your money. And using the wrong one can be the difference between building long-term wealth and gambling your savings away on a platform designed to feel more like a casino than a brokerage. In the United States alone, over 150 million people have a brokerage account, and a massive portion of them are using apps that are fundamentally mismatched with their personal financial goals. This video is going to fix that. This isn't another lazy top 5 list where I just read you the marketing slogans. We are going on a deep, comprehensive, no-nonsense journey through the biggest stock trading platforms in America. We are going to put Robinhood, Webull, Fidelity, Charles Schwab, and M1 Finance under the microscope. We're going to tear them down and rebuild them piece by piece based on the 5 criteria that actually matter. First, fees and commissions. Where are the hidden costs? Is commission-free really free? Second, user interface and experience. Is the app built for a brand new investor, a seasoned pro, or someone in between? Third, research and tools. Does the platform give you the data you need to make smart decisions? Or does it hide the details to keep you trading? Fourth, investment options. Can you only buy stocks? Or can you build a truly diversified portfolio with things like mutual funds, bonds, and international investments? And finally, number 5, customer support. When something goes wrong, and eventually it will, is there a real human being you can call to help you? By the end of this investigation, you will know with absolute certainty which of these platforms is the right one for you. Not for me, not for some influencer on TikTok, but for your specific goals, your risk tolerance, and your level of experience. So let's get into it. Let's start with the one that changed everything. The disruptor. The app that made commission-free the industry standard and put the fear of God into the old guard Wall Street brokerages. Let's talk about Robinhood. Launched in 2013, Robinhood's mission was simple and revolutionary. Democratize finance for all. Before Robinhood, if you wanted to buy a stock, you were likely paying your broker a fee, maybe $7 or $8 per trade. That doesn't sound like a lot, but for someone starting with just a few $100s, those fees could eat up a huge percentage of their investment. Robinhood came in and said, "Nope, it's free." And with a sleek, minimalist, mobile-first design, it attracted millions of new younger investors to the market. So let's run it through our 5-point inspection. First up, fees and commissions. On the surface, Robinhood is exactly as advertised. You can buy and sell stocks, ETFs, options, and cryptocurrencies with 0 commission fees. This is their headline feature, and it is legitimately a huge advantage, especially for people who are trading frequently with smaller amounts of money. But this is where we have to ask the critical question. If the product is free, how are they making money? The primary answer is a controversial practice called payment for order flow, or PFOF. In simple terms, instead of sending your buy or sell order directly to a major exchange like the New York Stock Exchange, Robinhood sends it to a third party, a high-frequency trading firm, also known as a market maker. These firms pay Robinhood for the right to execute your trade. Now, is this a deal breaker? Not necessarily. All a market maker has to do is give you a price that is at or better than the official best price on the market, known as the national best bid and offer. The controversy is that they might not be giving you the absolute best price improvement possible. We're talking about fractions of a penny per share, but when you multiply that by millions of users and billions of trades, it adds up to a colossal amount of money for the market makers and for Robinhood. For the average small investor, the impact of PFOF is almost negligible, but it's a critical point of transparency. Commission-free doesn't mean there's no cost. It just means the cost is hidden from you. Robinhood also makes money from their optional Gold subscription, which gives you access to margin investing and more detailed market data for a monthly fee. Next, let's talk about Criterion 2, the user interface. This is, without a doubt, Robinhood's crown jewel. The app is beautiful. It's clean, intuitive, and incredibly easy to use. Opening an account takes minutes. Linking your bank is seamless. Buying a stock is as easy as ordering a pizza. There are no intimidating charts, no complex order forms, just a simple buy and sell button. And of course, there was the infamous digital confetti that would burst on your screen after your first trade. This frictionless experience is what brought an entire generation into the stock market. But it's also its biggest potential danger. The platform's design has been heavily criticized for gamifying investing. It can make trading feel like a simple mobile game, divorced from the real-world risk of losing your hard-earned money. It simplifies things to a point where it can encourage impulsive, emotional decisions rather than thoughtful long-term strategy. For an absolute beginner who is easily intimidated, this simplicity is a godsend. For anyone trying to take investing seriously, this same simplicity quickly becomes a frustrating limitation. This leads us directly to Criterion 3, Research and Tools. This is where the Robinhood experience begins to fall apart for anyone who wants to grow as an investor. The tools available are, to put it bluntly, basic. You get simple candlestick charts, a watch list, and a news feed. The company profile pages offer some top-level statistics, but there's a severe lack of deep, fundamental data. You won't find advanced financial statements, analyst ratings breakdowns, or sophisticated stock screening tools that let you filter for companies based on specific criteria like PE ratio or dividend yield. If you want to do any real research on a company, you are forced to leave the Robinhood app and use other websites like Yahoo Finance or a dedicated research platform. In essence, Robinhood is a platform for executing trades, not for making informed investment decisions. It expects you to do your homework somewhere else. Fourth on our list, investment options. Robinhood offers a decent but limited selection. You can trade thousands of US stocks and exchange-traded funds, ETFs. You can also trade options, which is a big plus for more advanced traders, and a selection of popular cryptocurrencies. However, there are some glaring omissions. You cannot invest in mutual funds, which are a cornerstone of long-term, diversified retirement investing for millions of Americans. You can't buy bonds, international stocks, or other asset classes. So if your goal is to build a truly comprehensive, globally diversified portfolio all in one place, Robinhood is not the platform for you. It is heavily focused on the most common and often most volatile US assets. Finally, Criterion 5, customer support. This has historically been Robinhood's Achilles heel. In its early days, getting help from a human was nearly impossible, with support being almost entirely email-based with long wait times. During major market events or platform outages, users were left with no one to call as their money hung in the balance. This rightfully led to a massive public outcry and regulatory scrutiny. To their credit, Robinhood has invested heavily in improving this. They now offer 24/7 phone support, which is a monumental step in the right direction. However, their reputation in this area was so damaged that it remains a major concern for many potential users. When your life savings are on the line, the quality of customer support is not a feature. It's a necessity. So, who is Robinhood actually for? Here's the final verdict. Robinhood is for the brand new first-time investor who wants to buy a few shares of well-known companies and get a feel for the market with a small amount of money. Its beautiful interface and commission-free structure make it the least intimidating entry point into the world of investing. It's for someone who values simplicity and ease of use above all else. However, Robinhood is absolutely not for the serious long-term investor who wants to do their own research. It's not for the individual who wants to build a diversified retirement portfolio with mutual funds and bonds. And it's not for the data-driven trader who needs advanced tools and charting to execute their strategy. The platform's greatest strength, its simplicity, is also its most profound weakness. It's a fantastic set of training wheels, but if you ever want to ride a real bike, you're going to need to upgrade. And that upgrade for a massive number of retail traders has a name: Webull. If the first type of app is like learning to drive in an automatic sedan on an empty road, Webull is like being handed the keys to a manual sports car in city traffic. There's more power, more control, and a much steeper learning curve. But for those who are ready, it's an exhilarating step up. Webull burst onto the scene as a direct competitor to the simplified apps, but it took a fundamentally different approach. It looked at the market and said, what if we gave people the tools they're begging for, kept it commission-free, and wrapped it in an interface that feels like a command center, not a video game? And that's exactly what they did. The moment you open the app, the difference is jarring. Instead of a single clean line graph, you're met with a dashboard. There are watch lists, market indexes blinking red and green, top gainers, top losers, and a news feed. Can feel like information overload, and for a brand new investor, it probably is. But for the person who has outgrown the basics, it's a breath of fresh air. This isn't an app that holds your hand. It's an app that hands you a toolbox and expects you to know what to do with it. So who is this for? This is for the trader who has moved past asking, should I buy this stock? And is now asking, when should I buy this stock? It's for the person who has heard terms like support and resistance, moving averages, and RSI, and wants to actually see them on a chart. This is the platform for the active, engaged trader. The person who wants to analyze a stock's movements before work, check in during their lunch break, and set complex orders to execute while they're in a meeting. It's for someone who wants to feel closer to the market's pulse, not just get a summary at the end of the day. The absolute crown jewel of the Webull platform is its charting capability. This is without a doubt its biggest selling point. On your phone, you can pull up a full-screen, detailed candlestick chart. You can pinch and zoom through different time frames, from a 1-minute chart to see intraday volatility, all the way out to a monthly chart to see the long-term trend. But the real power comes from the dozens of technical indicators you can overlay. Want to see the 50-day and 200-day moving averages to identify a potential golden cross? Tap tap, it's there. Want to use the relative strength index to see if a stock is overbought or oversold? It's a click away. Bollinger Bands, MACD, volume profiles. It's a technical analyst playground, and it's all on the device in your pocket. This is a game changer because it empowers you to form your own opinions based on data, rather than just relying on headlines or a gut feeling. Another massive feature that sets Webull apart is its paper trading simulator. This is, frankly, something every single brokerage should offer. Webull gives you $1 million in fake money to trade in a real-time market environment. This is your flight simulator. Want to test a new options strategy without blowing up your account? Do it in the paper trader. Curious about how a swing trade would play out over a few weeks? Test it with fake money. This feature alone provides an incredible educational value, allowing you to make your rookie mistakes without paying for them with real capital. It's the perfect sandbox to build confidence and refine your strategy before you put a single real dollar on the line. Furthermore, Webull caters to the active trader with its extended trading hours. While many basic apps only let you trade when the market is open, from 9:30 a.m. to 4 p.m. Eastern Time, Webull offers full pre-market and after-hours trading, typically from 4 a.m. to 8 p.m. Why does this matter? Because a lot of the most significant price movement happens outside of regular hours. A company might release a blockbuster earnings report at 4:30 p.m., and its stock could surge 20% before the market even opens the next day. With a basic app, you're just a spectator. With Webull, you have the option to be a participant. This access gives you a level of control and opportunity that's simply unavailable on more simplified platforms. But, and this is a big but, the platform is not without its serious drawbacks. The very thing that makes it powerful, the sheer volume of data, can be its greatest weakness. It can lead to what's known as analysis paralysis, where you're so overwhelmed with indicators, charts, and opinions that you become frozen, unable to make a decision. It can also foster a dangerous illusion of control. Just because you have access to professional-looking tools doesn't automatically make you a professional trader. It's easy to get lost in the weeds, focusing on minute-to-minute chart fluctuations, while completely missing the bigger picture about the company's fundamental health. There's also the social component. Webull has a community feed for each stock, where users can post comments, analysis, and more often than not, pure speculation. While it can occasionally be a source of interesting ideas, it's more frequently an echo chamber of hype and misinformation. For a new trader trying to learn, this fire hose of biased opinions can be incredibly detrimental, making it hard to distinguish between genuine analysis and someone just trying to pump up a stock they own. And while the trading itself is commission-free, you have to be mindful of the data subscriptions. For the truly high-frequency trader, access to Level 2 data, which shows the depth of buy and sell orders, is crucial. On Webull, this is typically a paid monthly subscription. It's not expensive, but it's an example of how the free model starts to have asterisks as your needs become more advanced. Their customer service has also faced criticism, as is common with many of these low-cost fintech brokers. When things go wrong, you're more likely to be dealing with a chatbot or an email queue than getting an experienced professional on the phone in 2 minutes. You're trading lower costs for less personalized support. So what's the verdict on Webull? It is the undisputed king of the intermediate-level trading apps. It is the perfect bridge for the trader who has mastered the basics and is hungry for more. It provides the tools, data, and access that allow you to evolve from a passive investor into an active analytical trader. The charting is best in class for a free mobile platform, and the paper trading feature is an invaluable educational tool. However, it's a double-edged sword. It demands more from you. It requires discipline to not get caught up in the noise, to not overtrade, and to not be swayed by the speculative chatter in the community feed. It's not the right place to start your journey, but it is an excellent destination for your second chapter. It's the platform that can truly grow with you, from your first attempt at technical analysis to executing complex, multi-leg option strategies. It's powerful, it's comprehensive, and for the right user, it's liberating. But what if even this isn't enough? What if you need the kind of institutional-grade research, rock-solid stability, and comprehensive financial planning tools that the biggest names in the business have spent decades building? What happens when your side hustle of trading starts to look more like a serious portfolio that needs to be managed for the long haul? That's when you graduate from the new school fintech apps and enter the world of the true heavyweights. And when we talk about heavyweights, we're not just talking about companies with bigger logos or fancier commercials. We're talking about a fundamental shift in what a brokerage platform is. Think of it this way: the apps we discussed before are like specialty coffee shops. They do one or two things exceptionally well, making it easy and cheap to buy a stock, for example. But the platforms we're about to dive into? These are the giant, sprawling supermarkets of the financial world. You don't just go there for coffee. You go there for everything. Your retirement accounts, your kids' college funds, your checking account, your mortgage, your financial advisor. Everything under one massive, heavily regulated roof. This is the world of the full-service brokerage. And at the top of this mountain, 3 titans are in a constant battle for your portfolio: Charles Schwab, Fidelity, and E-Trade. Let's start with the undisputed empire, Charles Schwab. If the brokerage world were Star Wars, Schwab would be the galactic empire. It's colossal, it's everywhere, and its power is undeniable. For decades, Schwab has been a cornerstone of American investing, building a reputation for trust and reliability that newer apps can only dream of. But don't mistake age for being slow. In a move that sent shockwaves through the industry, Schwab acquired its biggest rival, TD Ameritrade. Why does that matter to you? One simple, beautiful, powerful name: Thinkorswim. Thinkorswim isn't just a trading platform. It's a command center for your financial life. It is, without exaggeration, one of the most powerful and comprehensive trading tools available to retail investors, period. The level of charting, technical analysis, backtesting strategies, paper trading, and complex options analysis is staggering. For a new investor, it can look like the cockpit of a 747, intimidating to say the least. But for the investor who is getting serious, who wants to move beyond just buying and holding, and really understand the mechanics of the market, Thinkorswim is the holy grail. And now it's part of the Schwab ecosystem. But Schwab is more than just a powerful trading platform. It's a bank. You can have a checking account with them that has 0 foreign transaction fees and unlimited ATM fee rebates worldwide. A feature that, on its own, is a game changer for travelers. You can get a mortgage, you can open an IRA, a Roth IRA, a 401k, a 529 plan for college savings. The integration is seamless. Your portfolio isn't just a collection of stocks in an app. It's one piece of your entire financial picture, all managed in one place. Their customer service is legendary. You can call a 24/7 hotline and speak to a licensed professional. You can walk into one of their hundreds of physical branches and talk to a human being face to face. This is the security and integration you're paying for. Except you're not. Like the new school apps, Schwab offers 0 commission trades on stocks and ETFs. They've adapted to the new world while retaining the power and trust of the old. The downside? Their main website and mobile app, separate from thinkorswim, can feel a bit dated. It's functional, but it doesn't have that slick, gamified feel of a Robinhood. It feels like a bank. For some, that's a bug. For the serious long-term investor, that's a feature. Now, if Schwab is the established empire, then Fidelity is the equally powerful, slightly more modern rival kingdom. Fidelity is another absolute behemoth in the investment world, managing trillions of dollars in assets. For years, the debate has raged, Schwab or Fidelity, and the truth is, for most long-term investors, you can't go wrong with either. But they have different personalities. Where Fidelity truly shines is in its user experience and its commitment to providing immense value, particularly for buy-and-hold investors. Their website and their main mobile app are consistently ranked as some of the best in the business. They're clean, intuitive, and manage to pack an incredible amount of information and research onto the screen without feeling cluttered. It's the perfect middle ground between the overwhelming power of thinkorswim and the oversimplified nature of the fintech apps. Fidelity's research tools are, simply put, phenomenal. They provide access to in-depth reports from more than 20 third-party providers, giving you a comprehensive view of any stock you're considering. Their screeners for stocks, ETFs, and mutual funds are incredibly robust, allowing you to filter by almost any metric you can imagine. And speaking of funds, that's Fidelity's home turf. They pioneered the low-cost mutual fund and now offer a range of zero-fee index funds. That's right, funds with a 0% expense ratio. They also offer fractional shares, which is a huge advantage. This allows you to invest by the dollar amount, not the share price, meaning you can own a piece of Amazon or Google even if you don't have thousands of dollars to buy a full share. It's a feature they adopted from the newer apps, and it makes them incredibly accessible for people just starting to build a serious portfolio. Like Schwab, Fidelity offers the full suite of financial services, banking, retirement accounts, planning tools, and top-tier 24/7 customer service. So where's the trade-off? While Fidelity has a platform for active traders called Active Trader Pro, the consensus is that it's not quite on the same level as Schwab's thinkorswim, especially for highly complex option strategies. Fidelity's strength lies in being the absolute best all-around platform for the vast majority of investors, from the beginner who wants to grow to the sophisticated long-term portfolio manager. It's powerful, but it's also welcoming. Finally, we have the original online rebel, E-Trade. Before Robinhood, before Webull, E-Trade was the company that disrupted the old-school brokerage model by bringing trading to the masses online. They have a legacy of innovation, and that DNA is still present today. E-Trade was recently acquired by the investment bank Morgan Stanley, which adds another layer of institutional credibility and access to world-class research. E-Trade carves out a fantastic niche for itself, sitting somewhere between the all-encompassing financial ecosystems of Schwab and Fidelity and the pure, high-octane trading focus of a platform like Webull. Their crown jewel is the Power E-Trade platform. It is a beautifully designed, web-based platform that is an absolute dream for options traders and active stock traders. It's visually intuitive, with tools that make it easy to map out potential profit and loss on complex trades, scan for unusual options activity, and execute trades with speed and precision. While thinkorswim might have more raw analytical power under the hood, many traders find Power E** trades interface faster and easier to navigate for day-to-day trading. Their standard mobile app is also excellent, arguably one of the best of the big three. It strikes a great balance between providing deep functionality and being easy to use on the go. E-Trade also offers a full suite of banking and retirement products, so it can absolutely serve as your one-stop financial shop. The Morgan Stanley acquisition means E-Trade clients now get access to a fire hose of top-tier analyst reports and market commentary that was previously reserved for high-net-worth clients. So how do you choose between these titans? It comes down to what kind of investor you are becoming. If you are, or aspire to be, a highly active, technically driven trader who wants the most powerful analytical tools at your fingertips, Charles Schwab with the included thinkorswim platform is almost impossible to beat. It is the professional-grade choice for the retail investor. If you are a long-term investor who values a clean user interface, top-of-the-line research, fractional shares, and access to a massive selection of low-cost funds, Fidelity is your champion. It is arguably the best all-around platform for building and managing wealth over the long haul. And if you're an active trader, especially in options, who values a slick, modern, and intuitive trading platform above all else, E-Trade is an outstanding choice. Power E-Trade is a masterpiece of design and functionality that makes sophisticated trading feel accessible. The key takeaway is this: Graduating to one of these platforms isn't just about getting more charts and graphs. It's about security. It's about consolidation. It's about knowing that when you have a problem with a 5 or 6-figure account, you can call a number and a licensed professional will help you 24/7. It's about the peace of mind that comes from having your serious money with a serious, time-tested institution. These platforms aren't just apps, they are financial partners. But what if you want the best of both worlds? What if you want the power of these legacy brokers, but with a specific focus on a certain type of investing like dividend growth or value investing? There are specialized tools out there that can supercharge your strategy. And these specialized tools are a game changer because they're not trying to be everything to everyone. Think of a broker like Fidelity or Schwab as a massive top-of-the-line Swiss Army knife. It has 100 different tools and it can do almost anything you ask of it, from opening a can of beans to sawing a small branch. It's incredibly capable. But if your entire job, your entire passion, is to be a world-class chef, you don't use a Swiss Army knife to slice a tomato. You use a perfectly balanced, razor-sharp chef's knife. It does one thing, but it does it with a level of precision and elegance that the all-in-one tool can never match. That's the world of specialized brokers. They are the chef's knives, the surgical scalpels, the fine-tuned instruments designed for a specific investing philosophy. And one of the most popular and unique philosophies they cater to is automated, long-term wealth building. This is for the investor who says, "I know what I want to own. I just want the process of buying and maintaining it to be completely effortless." Enter M1 Finance. M1 Finance isn't just an app. It's an entire system built around one brilliant, central concept: the pie. Imagine you want to build a portfolio. Maybe you want 30% in a total stock market ETF like VTI, 20% in an international ETF, 10% in a bond fund, and then for the remaining 40% you want to handpick 10 individual dividend-paying stocks, giving each one a 4% slice. On a traditional brokerage, you'd have to do the math yourself. You'd deposit $1,000, then calculate that you need to buy $300 of VTI, $200 of the international fund, and so on. Then, for your 10 individual stocks, you'd have to manually place 10 separate orders for $40 each. And what happens next month when you deposit another $1,000? You have to do it all over again. And what if one of your stocks, say Apple, has a great month and grows from 4% of your portfolio to 5%, while another one, maybe Verizon, drops a bit? Your portfolio is now out of balance. To fix it, you'd have to manually sell a little Apple and buy a little Verizon. This is a constant, tedious, and frankly annoying process. M1 Finance completely obliterates this problem with its pie system. You build your ideal portfolio, your pie. Once. You set your target percentages for each slice, whether it's an ETF or an individual stock. Then, every time you deposit money, M1 automatically allocates it across your entire pie to maintain your target percentages. It's dynamic rebalancing on autopilot. If your Apple slice is overweight, your new money automatically flows into the underweight slices to bring everything back into perfect alignment. You don't press a button. You don't do any math. You just deposit money, and your pie maintains its perfect shape. This is an absolute godsend for dividend growth investors and bogleheads, people who follow the Jack Bogle philosophy of buying and holding diversified, low-cost funds. It automates the single most important habit of successful long-term investing: consistently buying your chosen assets. It removes emotion and friction from the equation. There's no temptation to tinker, no analysis paralysis every time you want to invest new money. You simply feed the machine, and the machine executes your perfect, predetermined strategy. They also have a fantastic feature for dividend investors. When your stocks and ETFs pay out dividends, that cash doesn't just sit in your account. It's automatically reinvested according to your pie's targets. It's a completely closed-loop system for compounding wealth. So, who is M1 Finance not for? It is unequivocally 100% not for traders. M1 is built on a long-term philosophy, and they enforce this with their trade execution. They typically have only 1 or 2 trade windows per day. This means if you decide to buy a stock at 10 a.m., the trade might not actually execute until the afternoon window. You don't get to control the exact price you buy or sell at. For a day trader, this is a deal breaker. But for a long-term investor, it's actually a feature, not a bug. It prevents you from panic selling during a midday market dip, or impulsively chasing a stock that's running up. It forces you to be an investor, not a gambler. M1 is the scalpel for the disciplined, automated, long-term builder. But what if your strategy isn't just about automation? What if you believe investing is a team sport? What if you want to learn from others, see what real people are buying, and understand the story behind the stock, not just the numbers on a chart. This brings us to our next specialist, Public.com. Public entered the scene with a mission to change the very culture of retail investing. It looked at the chaos of forums like Wall Street Bets and the isolated experience of trading on a traditional app and said, there has to be a better way. Their core idea is to make investing a social, transparent, and educational experience. When you open Public, it feels different. It's less like a sterile banking app and more like a curated social media feed. But for investors, you can follow other investors, from seasoned financial analysts to everyday people who are just passionate about a particular company. When someone buys or sells a stock, they can attach a note explaining their thesis, their why. Suddenly, you're not just seeing that someone bought shares of Nvidia. You're seeing why they believe in its long-term AI strategy, or why they think the recent earnings report was so significant. This creates a continuous, real-time stream of ideas and insights. It's like having a window into the minds of thousands of other investors. You can see what's trending, not just in the news, but within the community itself. You can join group chats dedicated to specific themes like EV revolution or the future of health, and discuss ideas with people who share your interests. But Public's biggest and most important differentiator, the move that truly set them apart, was their decision to abolish payment for order flow, or PFOF. This is a hugely important concept to understand. PFOF is the system many commission-free brokers use to make money. When you place a trade, they don't send it directly to the New York Stock Exchange. Instead, they send it to a massive wholesale market maker like Citadel Securities or Virtu Financial. These firms pay the broker for the right to execute your trade. They are paying for your order flow. The controversy is that this creates a potential conflict of interest. Is the broker routing your order to get you the absolute best possible price, or are they routing it to the market maker who pays them the most? Public decided to end this debate for their platform. They moved to a tipping-based model and now route orders directly to the exchanges, which they argue results in better price execution for their customers. This was a bold, expensive, and pro-consumer move that earned them a ton of respect and trust. Public is also a fantastic platform for those who want to invest beyond just stocks and ETFs. They have seamlessly integrated alternative assets into the same app. You can buy cryptocurrencies, but you can also invest in fractional shares of fine art by artists like Banksy or Basquiat, collectibles like rare sneakers and comic books, and even invest in treasuries. It's a modern, diversified portfolio for a modern investor, all in one place. So, who is Public for? It's for the investor who is endlessly curious, the person who wants to learn by doing and learn from others. It's for someone who feels isolated in their investing journey and wants to be part of a community that's having a real, intelligent conversation about the markets. It's for the investor who values transparency and wants to support a business model that they believe is more aligned with their own interests. The trade-off? Public is not the most powerful analytical tool. Its charting is basic compared to the legacy brokers. It's not built for the hardcore technical analyst. Its strength lies in its community and its user experience, not its raw data crunching power. So we have the automated powerhouse in M1 Finance and the community-driven educator in Public.com. Two brilliant, specialized platforms that cater to specific types of investors. But this begs the question, what about the platform that started it all? The app that single-handedly blew the doors off the entire industry, forced every single legacy broker to go commission-free, and brought millions of brand new investors into the market for the very first time. I'm talking, of course, about the one that is arguably the most famous and most controversial of them all. Robinhood. Even the name itself sounds disruptive. Steal from the rich, give to the poor. And in a way, that was the mission. To take the keys to Wall Street, this exclusive club of financial elites, and hand them over to everyone. And for a while, it felt like they were succeeding beyond anyone's wildest dreams. When the Robinhood app first launched, it felt less like a financial tool and more like a beautifully designed video game. You have to remember what it was competing against. The old guard, the brokerages our parents used, had websites that looked like they were designed in 1998. They were clunky, confusing, filled with intimidating charts and jargon that felt designed to keep normal people out. Then came Robinhood. It was clean. It was green. It was simple. You opened the app, you typed in a ticker symbol, you swiped up, and you owned a piece of a company. It was magical. And when your trade went through, confetti, a literal explosion of digital confetti on your screen. It was a dopamine hit, a little reward that said, "Congratulations, you're an investor now." Critics called this gamification, They argued Robinhood was turning the serious business of investing into a mindless mobile game, encouraging reckless behavior. And they weren't entirely wrong. But what they missed was why it was so effective. It removed the single biggest barrier to entry for a new generation: fear. The fear of doing it wrong, of pressing the wrong button, of being judged. Robinhood made investing feel accessible, easy, and even fun. And they didn't just innovate on design. They introduced two revolutionary features that fundamentally changed the game. First, as we mentioned, was zero commission trading. It's the industry standard now, but back then it was seismic. Paying $7 or $10 just to buy a single share of stock was a massive hurdle for someone with only $100 to invest. Robinhood vaporized that hurdle overnight. Second, and perhaps even more profound, was fractional shares. Before Robinhood, if you wanted to buy a share of Amazon, you might have needed over $1,000. For most people, that was a non-starter. Fractional shares changed the equation. Suddenly, you could invest just $5 and own a tiny sliver of Amazon or Google or Tesla. It meant that your budget no longer dictated which companies you could invest in. It truly democratized ownership of the world's biggest and most successful companies. This combination, a brilliant user interface, zero commissions, and fractional shares, was the holy trinity that powered their explosive growth. It was a rocket ship. But as we all know, rocket ships can be volatile and sometimes they blow up on the launch pad. And that brings us to the controversy, the dark side of the feel-good story. To understand it, you have to ask a very simple question. If they aren't charging you commissions, how on earth is Robinhood making money? The answer is a complex and highly debated practice called payment for order flow, or PFOF. Let's break this down. When you press that buy button on Robinhood, your order doesn't go straight to the New York Stock Exchange. Instead, Robinhood bundles up your order with thousands of others and sells that bundle to a third party, a massive high-frequency trading firm known as a market maker, like Citadel Securities or Virtu Financial. These firms pay Robinhood for the right to execute your trades. Why would they pay for that? Because they can profit from it. They operate on a massive scale, and by getting a sneak peek at all these retail orders, they can make money on the tiny price differences between the buying and selling price, what's called the bid-ask spread. We're talking about fractions of a penny per share. But when you multiply that by billions of shares, it becomes a colossal amount of money. So what's the problem? Robinhood argues it's a win-win. You get commission-free trades, they get paid by the market makers. But critics argue that you, the user, might not be getting the absolute best price on your trade. That fraction of a penny the market maker is profiting from? That could have been a slightly better price for you. Over thousands of trades, that can add up. It's the classic saying, if you're not paying for the product, you are the product. Your trades are the product being sold. This business model simmered under the surface for years, but it exploded into the public consciousness in January of 2021. The GameStop saga. It's a story that will be studied in financial history books for decades. A band of retail investors on a Reddit forum called Wall Street Bets realized that several massive hedge funds were aggressively short-selling GameStop, essentially betting the company would go bankrupt. These Redditors saw an opportunity. They started buying up shares and options en masse, creating a short squeeze that sent the stock price into the stratosphere. It was a rebellion, a digital pitchfork mob storming the castle of Wall Street. And Robinhood was their weapon of choice. Millions of new users were signing up, all piling into GameStop, AMC, and other so-called meme stocks. The hedge funds were losing billions. It was David versus Goliath, and for a glorious moment David was winning. And then, on the morning of January 28th, the unthinkable happened. Users logged into their Robinhood accounts to buy more GameStop. And they couldn't. The buy button was gone. You could sell, but you couldn't buy. The platform had unilaterally restricted trading on the very stocks that were fueling the revolution. The outrage was instantaneous and immense. Accusations flew. People screamed that Robinhood was protecting the hedge funds, that they had colluded with the very Wall Street institutions they claimed to be fighting against. It felt like a profound betrayal. Robinhood's official explanation was more complicated. They claimed the volatility was so extreme that their clearinghouse, the intermediary that settles the trades, demanded they put up billions of dollars in collateral, money they simply didn't have at that moment. To reduce their risk, they had to halt buying. While this explanation is financially plausible, the damage was done. The trust was shattered. To millions of users, the company that promised to democratize finance had pulled up the ladder right when the common person was finally starting to win. So where does that leave Robinhood today? It's a platform of deep contradictions. The user interface is still, in my opinion, the cleanest and most intuitive for an absolute beginner. If your goal is to simply buy and hold a few ETFs or blue-chip stocks for the long term, and you want the easiest possible experience, Robinhood is still a fantastic choice. The introduction of retirement accounts like IRAs with a company match has also added a layer of legitimacy and long-term utility. However, the scars of its past remain. The customer support is notoriously difficult to reach, often relying on email and chatbots when what you desperately need is a human on the phone during a market panic. The platform has also suffered from major outages during periods of high trading volume, which is exactly when you need it to be reliable. And the core business model of payment for order flow will always be a point of concern for serious traders who demand the best possible execution on their orders. Ultimately, Robinhood is the gateway drug to investing. It's brilliant at getting you in the door. It's simple, it's sleek, and it removes the initial intimidation factor better than anyone else. But for many, it's a place you start, not a place you stay. Once you begin to take your investing more seriously, you start to notice the limitations. You want more data, better charting tools, more robust research, and the confidence that your broker is on your side, not just selling your trades to the highest bidder. But what if you love the modern, mobile-first feel of Robinhood but you want more? More power, more data, more tools designed for a slightly more active and informed trader? What if you want to graduate from the beginner's leagues without having to go back to those clunky, old-school brokerage websites? Well, there's an app that saw that exact opening in the market and tried to become the answer. That app is Webull, and it didn't just see the opening, it drove a truck right through it. Webull looked at the landscape and saw a massive underserved group of people who had started their journey, who understood the basics of buying and selling, but who were hitting a wall. They were hungry for more. More data, more tools, more control. They wanted to graduate from a point-and-shoot camera to a DSLR. They were ready for manual mode, ready to understand the mechanics of what makes a great shot, not just get lucky with the auto setting. Webull's entire philosophy is built on this premise: that you, the retail investor, are smarter than the simple apps give you credit for. And if you're not there yet, they'll give you the tools to get there. It's not just a trading app, it's a command center. Opening Webull for the first time after using a more basic platform is like stepping out of a go-kart and into the cockpit of a fighter jet. Suddenly there are buttons, switches, and screens everywhere. It can be intimidating. Honestly, it can be downright overwhelming. But for the right person, it's exhilarating. Let's talk about what that really means. Forget the simple, elegant line graph that just shows you if a stock went up or down. Webull gives you professional-grade charting tools that were, until a few years ago, the exclusive domain of people paying hundreds of dollars a month for expensive software. We're talking about candlestick charts that tell a story in every single bar. We're talking about the ability to overlay dozens of technical indicators. Think about it this way. On a simple app, you see a stock is going up. You might think, great, I should buy. But you have no idea why it's going up. Is it because of genuine buying pressure? Or is it just a temporary volatile spike that's about to crash? On Webull, you can pull up the Relative Strength Index, the RSI, to see if the stock is overbought. You can add the MACD indicator to look for a momentum shift. You can draw Bollinger Bands to see if the price is hitting a level of resistance. You can draw your own trend lines, support levels, and Fibonacci retracements. You stop being a passenger just watching the price and you start becoming a detective, piecing together clues to figure out where the price might go next. This is the single biggest step up from beginner platforms. It's the transition from gambling to analyzing. And then there's the holy grail for active traders, Level 2 data. Now this sounds super technical, but let me break it down. On most apps you see one price, the last price the stock was traded at. That's it. Level 2 data is like having X-ray vision into the market itself. It shows you the order book. You can see a list of the bids, the prices people are willing to pay for the stock, and how many shares they want. And you can see a list of the asks, the prices people are willing to sell the stock for, and how many shares they're offering. Why is this a superpower? Because it lets you see supply and demand in real time. If you see a giant wall of buy orders at $50, you know there's a lot of support at that price and it's less likely to drop below it. If you see a massive sell wall at $51, you know it's going to struggle to break through that level. It's the difference between seeing a car listed for sale and being able to see the entire negotiation happening live between all potential buyers and sellers at once. For a day trader trying to scalp a few cents of profit, this information isn't just helpful, it's everything. Webull often provides this for free, while other platforms hide it behind a subscription paywall. But Webull understands that giving someone the keys to a fighter jet without any training is a recipe for disaster. That's why one of their most brilliant features is something that every single new trader should use: paper trading. This is a full-blown market simulator. They give you $1 million in fake money, and you can trade in the real market with real-time data, using all of Webull's advanced tools, without risking a single penny of your own cash. You can test out strategies. You can learn how to set a stop-loss order. You can see how badly a trade can go if you get greedy. It's a financial flight simulator. You can crash and burn a dozen times, and all you lose is fake money and a little bit of pride. The lessons you learn, however, are very, very real. It is, without a doubt, one of the most valuable educational tools in the entire industry. And the control doesn't stop there. One of the biggest frustrations for retail traders is that the market seems to only be open when they're at work. The bell rings at 9:30 a.m. Eastern and closes at 4 p.m. But the news cycle doesn't stop. A company might drop a game-changing earnings report at 4:05 p.m. A CEO might make a shocking announcement at 8 a.m. On most platforms, all you can do is watch helplessly as the stock price skyrockets or plummets in the pre-market or after-hour sessions, unable to do anything until the market opens. Webull offers extensive extended hours trading, often starting as early as 4 a.m. and going as late as 8 p.m. That 5.5-hour window of opportunity that most people are locked out of? Webull opens the door. It gives you the ability to react to news when it happens, not just hours later after all the big moves have already been made. Now, this all sounds incredible, and for a certain type of trader it is. But we have to be honest about the trade-offs because there are significant ones. That fighter jet cockpit? It's complicated. The learning curve is steep. The sheer amount of information on the screen at one time can lead to analysis paralysis. Finding a specific setting can sometimes mean digging through 3 or 4 submenus. This is not a platform you master in an afternoon. It takes time, it takes effort, and it takes a genuine desire to learn the intricacies of technical analysis. If you don't have that desire, Webull won't feel empowering. It will just feel cluttered and confusing. And like many of the zero-commission brokers, customer service can be a mixed bag. You're not getting a dedicated financial advisor you can call on the phone. You're more likely to be dealing with email tickets and in-app chat support, and response times can vary. For most day-to-day issues, it's fine. But if you have a complex, urgent problem, it might not be the white-glove service you'd get from a premium, full-service brokerage. Finally, there's an elephant in the room we have to address. It's ownership. Webull is a US-based and regulated company, a member of FINRA and the SIPC, which means your securities are protected up to $500,000 just like any other American brokerage. However, its parent company is based in China. For some investors, this is a major concern due to geopolitical tensions and data privacy questions. For others, it's a non-issue, as they trust in the US regulatory framework that Webull operates under. It's not for me to tell you how to feel about it, but it's a crucial piece of information you need to have when making your decision. So, who is Webull for? It's for the active, engaged trader. It's for the person who wants to do their own analysis and form their own thesis. It's for the aspiring day trader, the swing trader, the options trader who needs sophisticated tools to execute their strategies. It's for the data junkie who gets excited by charts, patterns, and indicators. It's for the person who felt that the beginner apps were hiding the ball, and they want to see everything that the pros see. It is absolutely not for the passive investor. If your strategy is to just buy a handful of ETFs and a few blue-chip stocks every month and hold them for 30 years, Webull is massive overkill. It's like buying a Ferrari to go grocery shopping once a week. You can do it, but you're paying for a whole lot of engine you'll never ever use. Webull represents a clear fork in the road for an investor. It's a move towards technicals, towards data, towards short-term market dynamics. It's a platform built for the analytical mind. But what if all those charts, all that data just feels cold? What if you want to invest not just with your head, but with your heart? What if the community and the conversation around a stock are just as important as the numbers? There's a platform that threw out the day trading playbook and bet everything on a different kind of investor. And its approach might just change how you think about the market entirely. That platform is public.com, and its core belief is radical in the world of finance. What if investing isn't a solo mission? What if it's a team sport? Public threw out the entire playbook of isolated, high-speed trading, and built an experience that feels less like a sterile bank and more like a vibrant town square. It's a place where the conversation is the feature. Imagine opening your trading app, And instead of just seeing a watch list of red and green numbers, you see a feed. It looks a bit like Instagram or Twitter, but instead of vacation photos or hot takes, you see that an investor you respect just bought shares of Shopify. And right below the notification, they've written 3 paragraphs explaining exactly why. They believe the company's new partnership is being undervalued by the market, and they've laid out their entire thesis for everyone to see, discuss, and debate. You can then tap on their profile and see their entire portfolio, their track record, their long-term holdings. This isn't about blindly copying trades. It's about learning in real time from a collective intelligence. This is the fundamental difference. While other platforms give you charts, Public gives you context. It's built on the idea that the story behind a company, the human belief in its future, is a powerful data point that you can't find on a stock chart. The platform actively prompts you to share your reasoning when you buy or sell, transforming a simple transaction into a public declaration of your investment thesis. This simple feature has a profound psychological effect. It forces you to stop and think, wait, why am I buying this? Can I articulate my reasoning? It discourages impulsive, emotional decisions and encourages thoughtful, long-term conviction. It's the polar opposite of the chaotic, meme-fueled frenzy you might find on a Reddit forum. The conversations on Public are curated, they're attached to real identities and real portfolios, which brings a level of accountability you just don't find elsewhere. The user experience is a masterclass in this philosophy. The interface is clean, colorful, and incredibly intuitive. It's designed to feel welcoming, to demystify the process. Stocks aren't just tickers and charts. They're organized into themes that resonate with everyday life. You can explore categories like For the Greener Good, which contains clean energy companies, or The Future is Female, which highlights companies with female CEOs. This brilliant approach helps new investors connect the abstract world of the stock market to their own values and interests. It reframes the question from, what stock is going to pop tomorrow? To what kind of future do I want to invest in? And of course, it champions fractional shares because the philosophy is that you shouldn't be priced out of owning a piece of a company you believe in. If you think Amazon is the future but you don't have $3,000 for a single share, you can invest $50 and own a slice of it. This democratizes ownership and makes the market accessible to everyone, which is perfectly in line with their community-first ethos. So, who is this platform built for? First and foremost, it's for the investor who learns by collaboration and conversation. If you're the type of person who wants to understand the why behind an investment and hear diverse perspectives before you commit your capital, Public is your sanctuary. It's for the long-term believer who wants to invest in companies, not just trade stocks. The entire ecosystem is designed to help you build conviction and ride out the market storms, surrounded by a community that shares your long-term vision. It's also, arguably, the best starting place for an absolute beginner. The fear of making a mistake is dramatically reduced when you're surrounded by a supportive network, where you can ask questions and see how experienced investors are navigating the very same market. However, the platform's greatest strength is also its most defining limitation. Who is Public not for? It is absolutely not for the active day trader. If your strategy involves high-frequency trades, scalping small profits, and complex order types, you will feel like you've brought a paintbrush to a sword fight. The tools are simply not there, and the culture is actively against it. The platform is also not for the deeply technical, data-driven analyst. If you live and breathe by level 2 data, Fibonacci retracements, and advanced charting indicators, you will find Public's toolset to be frustratingly basic. It provides the essential information, but it prioritizes the narrative over the nitty-gritty numerical analysis. Finally, it's not for the intensely private investor. While you can set your profile to private, the magic of the platform, its core value proposition, is social transparency. If the idea of other people seeing what you're investing in is a deal breaker, you'll be using a social network with the social features turned off, and you'd likely be better served elsewhere. But here's where Public made a move that sent shockwaves through the industry and cemented its identity. They decided to abandon the most controversial and profitable practice in the brokerage world: payment for order flow, or PFOF. In simple terms, PFOF is when your broker takes your trade, and instead of sending it directly to the stock exchange, they sell it to a giant wholesale firm, a market maker, who then executes the trade. These market makers pay brokers like Robinhood billions for the right to execute your trades. The controversy is that it creates a potential conflict of interest. Is your broker getting you the absolute best price? Or are they routing your order to whoever pays them the most? Public said, "We're done with that." They moved to a different model. They now route your trades directly to the exchanges to compete for the best price. To make up for the lost revenue, they introduced an optional tipping system. When you make a trade, you have the option to add a small tip to help support the platform. It's a bold, almost audacious move that puts trust and transparency front and center. It aligns their success directly with their users' trust, not with back-end deals with market makers. Public is more than just a stock trading app. It's a statement. It's a bet that the future of investing is collaborative, transparent, and built on shared knowledge. It has since expanded to include cryptocurrencies and even alternative assets like fine art, sneakers, and collectibles, leaning further into its identity as a platform for the modern, culturally aware investor. If Robinhood made investing feel like a game and Webull made it feel like a science lab, Public makes investing feel like a fantastic dinner party with the smartest people you know. It's a place to share ideas, build conviction, and invest for the long term together. So, we've seen the app for the masses in Robinhood, the app for the data-hungry in Webull, and the app for the community in Public. But what if you want it all? What if you crave the institutional-grade power of a Wall Street terminal, with research tools so deep they can feel overwhelming, and customization so infinite you can build a trading dashboard that looks like a command center for a starship? What if you're ready to graduate to the platform that the pros and the most serious retail traders use to wage war on the market? Well, that's where we're going next, and you're going to want to buckle up. Welcome to the big leagues. Welcome to Interactive Brokers, or IBKR. This isn't just another app. It's an institution, and its flagship desktop platform, Trader Workstation, or TWS, is the very definition of that Starship Command Center we just talked about. Let's be brutally honest right from the start. If Robinhood is a go-kart, and Fidelity is a reliable family sedan, Interactive Brokers is a Formula One race car. It is blindingly fast, incredibly powerful, and if you don't know exactly what you're doing, you will spin out and crash on the very first turn. This platform is not for the faint of heart. It is not for the casual investor who wants to buy a few shares of Apple and check on them once a month. This is for the trader who is obsessed, the person who wants to control every single variable, who needs direct market access, who thinks in milliseconds, not minutes. This is for the aspiring professional, the high-volume day trader, the sophisticated options strategist, and the global macro investor who needs to trade futures in Chicago, stocks in Frankfurt, and bonds in Tokyo, all before breakfast, and all from a single unified account. So what gives it this legendary, almost intimidating reputation? Let's start with the single biggest differentiator: global reach. While other brokers might offer you access to a handful of international stocks through American depository receipts, or ADRs, IBKR gives you the keys to the entire kingdom. We're talking direct access to over 150 markets in 33 countries. You want to buy shares of Sony directly on the Tokyo Stock Exchange? You can do that. You want to trade Rolls-Royce on the London Stock Exchange? No problem. You see an opportunity in a small-cap company in Australia? You can execute that trade in Australian dollars in the middle of the night from your office in Ohio. This isn't a feature. It's a fundamental shift in what's possible for a retail trader. It turns the entire world into your investable universe. And the tool you use to navigate this universe is Trader Workstation. When you first open it, you will be overwhelmed. It's not an exaggeration. It looks like it was designed by engineers in the late 90s and has just had more and more features bolted onto it ever since. There are no friendly cartoon characters or celebratory confetti here. There are just windows, dozens of them, market scanners, watch lists, level 2 data, time and sales, options chains with every conceivable Greek letter displayed in real time. It is a fire hose of raw, unfiltered market data. But here's the magic. Nearly every single pixel is customizable. You can build your own bespoke trading mosaic, a layout perfectly tuned to your specific strategy. And within this complex interface lies a level of control that is simply unmatched. The order types alone are staggering. Of course, you have your standard market and limit orders, but you also have dozens of advanced and algorithmic orders. You can create complex bracket orders that automatically set a profit target and a stop loss the moment your entry order is filled. You can use trailing stop limits that ratchet upwards with a winning stock, but lock in profits if it turns against you. You can create conditional orders that only trigger if certain criteria are met, like if the S&P 500 is above its 50-day moving average, then buy this specific tech stock. You can even access an API to plug in your own custom trading algorithms. You are not just placing orders. You are programming your instructions directly into the market's plumbing. Now, for the reason all the pros and high-volume traders flock here, the cost. Interactive Brokers is by a massive margin the cheapest broker for active traders. Their per-share commission can be as low as a fraction of a penny. Their margin rates, the interest you pay to borrow money to trade, are the lowest in the industry, and it's not even close. When you are trading tens of thousands of shares a day, or using hundreds of thousands of dollars in margin, the difference between paying a few cents per trade versus zero, or paying 2% interest versus 8% isn't just a small savings. It's the difference between being profitable and going broke. They achieve this by being a no-frills, execution-focused brokerage. They don't spend billions on Super Bowl ads. They spend it on technology to route your order a millisecond faster to get you a fraction of a cent better on your price. But that Formula One car comes with Formula One maintenance costs and a steep learning curve. The first and most significant downside is that complexity. It is not a learning curve, it is a learning cliff. Expect to spend weeks, if not months, watching tutorials and reading manuals just to feel competent with the Trader Workstation platform. It is not intuitive. It is powerful, but it makes you work for that power. Second, let's talk about data. While platforms like Webull give you level 2 data for free with IBKR, you generally have to pay for it. Professional-grade, real-time market data is a product, and they charge for it. You can subscribe to data feeds from dozens of exchanges around the world, but each one comes with a monthly fee. For a serious trader, this is just the cost of doing business, like paying for electricity. But for someone coming from the everything is free world, it can be a real shock to the system. And finally, customer support. It's not bad, but it's not the hand-holding, white-glove service you might get at a full-service broker like Schwab. The assumption at IBKR is that you are a professional or on your way to becoming one. They expect you to have done your homework and to ask specific, intelligent questions. They will help you solve a technical problem with their platform, but they won't walk you through the basics of what an options contract is. Now, hearing all of this, you might be thinking, this sounds absolutely terrifying. This is not for me. And for years, that was the only option. But Interactive Brokers saw the rise of Robinhood and the commission-free movement, and they adapted. They introduced IBKR Lite. IBKR Lite is their answer for the rest of us. It offers zero commission trading on US-listed stocks and ETFs, just like the other major brokers. It uses a much simpler and more modern web platform and mobile app that feels more familiar and less like you're trying to launch a satellite. But here's the genius part. It still runs on the same powerful global institutional-grade backend. You still get the best-in-class order execution. You still get those rock-bottom margin rates. And you still have the ability to trade on foreign exchanges, though commissions will apply there. Think of it this way. IBKR Pro is the full manual transmission customizable race car. IBKR Lite is the same car, but with an automatic transmission and a simplified dashboard. You get the same engine and the same world-class performance, but in a package that's far more accessible. It's the perfect gateway. You can start with Lite, and if and when your needs become more sophisticated, you can flip a switch on your account and upgrade to Pro, unlocking the full Trader Workstation beast when you're ready to tame it. So Interactive Brokers occupies a unique space. It is, without a doubt, the most powerful and comprehensive platform available to the public. It is the Swiss Army knife for the global trader, with a tool for every conceivable situation. It's the undisputed champion for professionals, high-volume traders, and anyone who values cost and direct market access above all else. But that power comes at the cost of simplicity. We've seen the platform that tries to do everything for everyone all over the world. But what if you don't need to do everything? What if you're not a jack of all trades, but a master of one? What if you live and breathe one specific, high-stakes, and often misunderstood corner of the market? I'm talking about the world of options. There's a platform out there built from the ground up by legendary options traders, for options traders. A platform that thinks in probabilities, that visualizes risk, and that absolutely thrives on volatility. And that's where we're going next. We're talking about Thinkorswim. Originally developed by a company called Thinkorswim, which was later acquired by TD Ameritrade, and now is under the umbrella of Charles Schwab, this platform is a titan. It wasn't designed by Silicon Valley engineers trying to disrupt finance. It was built by pit traders from Chicago, people who lived and breathed options, who understood risk not as a number in a textbook, but as a tangible force that could make or break you in seconds. And that DNA, that origin story, is baked into every single pixel of its interface. To understand Thinkorswim is to understand that it's not just a place to click, buy, and sell. It is an analytical engine disguised as a trading platform. And the heart of this engine is a feature so powerful, so revolutionary, that for serious traders, it alone justifies the entire platform. The Analyze tab. Imagine you're thinking about an options trade, a simple covered call, or maybe something more complex like an iron condor. On any other platform, you see the prices, you place the trade, and you hope for the best. On Thinkorswim, before you risk a single dollar, you go to the Analyze tab. You input your potential trade, and the screen transforms. It doesn't just show you numbers, it shows you a picture of your risk. A graph, a risk profile, that visually displays your exact profit or loss at any possible stock price upon expiration. You can see your break-even points, your maximum profit, your maximum loss, all laid out with perfect clarity. But that's just the start. This is where the magic happens. You can grab that risk profile and stress test it. What happens if the stock price crashes by 20% tomorrow? Drag a slider, and the graph instantly recalculates and shows you the impact. What if volatility, the lifeblood of options prices, suddenly doubles? You change the implied volatility setting, and you watch your profit and loss curve morph in real time. It's like a flight simulator for your portfolio. You can simulate market hurricanes, black swan events, or just a boring Tuesday, and see exactly how your trade would perform, all before you commit. It even calculates the probability of your trade finishing in the money based on current market models. It's the difference between navigating a storm with a compass versus navigating with a full suite of GPS, radar, and satellite weather data. Then there's the Trade tab itself. For active traders, this is mission control. The Active Trader Ladder is a masterclass in design for speed and precision. You see the bids and asks moving in real time, and you can place, modify, and cancel orders with a single click. You're not typing in numbers and fumbling with confirmation screens. You're reacting to the market flow instantly. It allows for incredibly complex order types that are essential for risk management. Things like OCO orders, which stands for one cancels the other. You can set an order to take profit at a certain high price, and simultaneously set a stop-loss order to get you out if the price drops. The second one of those orders is filled, the other is automatically canceled. This is how professionals manage their risk, and Thinkorswim makes it accessible. The charting capabilities are, without exaggeration, bottomless. While other apps give you a handful of popular indicators like the RSI or MACD, Thinkorswim gives you hundreds. Literally hundreds of built-in studies from the most common to the most esoteric. And if that's not enough, it has its own proprietary scripting language called ThinkScript. This allows you to create your own custom indicators from scratch. If you can dream up a mathematical way to analyze the market, you can build it, backtest it, and plot it on your chart. It is a technical analyst's paradise. The level of customization is staggering. You can have 8 charts open in one window, all linked to the same stock but on different time frames, with different sets of indicators, all updating in real time. But perhaps the single greatest learning tool ever created for a retail trader is Thinkorswim's on-demand feature. This is not your standard paper trading account where you trade with fake money in the live market. That's useful, but on-demand is something else entirely. It is a time machine. You can literally go back to any trading day in the past, say the day of the Brexit vote, or the morning of the 2008 crash, or the peak of the dot-com bubble, and trade that day's market action as if it were happening live tick for tick. You can pause, rewind, fast forward. You can practice your strategy on the most volatile days in market history, seeing how you would have reacted, what mistakes you would have made, all without risking a penny. The educational value of this feature cannot be overstated. It's the equivalent of a pilot spending thousands of hours in a simulator before ever touching a real plane. So, with all this power, this professional-grade toolkit, what's the catch? Well, the catch is significant, and it's the reason this platform isn't for everyone. The learning curve isn't just a curve, it's a vertical cliff face. Opening Thinkorswim for the first time is a deeply humbling, borderline terrifying experience for a beginner. It's an overwhelming barrage of windows, buttons, numbers, and jargon. It feels less like an app and more like the cockpit of a space shuttle. There is no hand-holding. There are no friendly animations. The platform assumes you are there to work, and it provides you with every tool imaginable to do that work, but it offers very little guidance on how to use them. While there are countless tutorials online, the initial barrier to entry is immense. Furthermore, the platform is a resource hog. This isn't a lightweight mobile app. The desktop version is a serious piece of software that demands a decent amount of your computer's processing power and memory to run smoothly, especially if you have multiple charts and scanners running at once. And then there's the elephant in the room. the Charles Schwab acquisition of TD Ameritrade. For now, thinkorswim remains largely untouched and is even being rolled out to Schwab clients. But there is a lingering uncertainty in the community about its long-term future. Will Schwab, a company traditionally focused on long-term investors, continue to support and develop this hyper-complex platform built for active traders? The hope is yes, but it remains a question mark. So, who is thinkorswim for? It is for the student of the market. It is for the person who sees trading not as a lottery ticket, but as a craft to be honed, a skill to be mastered. It's for the aspiring or active options trader who needs to visualize and manage complex risk. It's for the technical analyst who wants to test every theory and build their own tools. It is for the trader who wants the absolute best, most powerful analytical software available to a retail customer, and is willing to invest the significant time and effort required to learn how to wield it. If you are just buying and holding ETFs for the next 30 years, using thinkorswim is like using a NASA supercomputer to do basic arithmetic. It is glorious, magnificent overkill. We've journeyed from the ultimate simplicity of Robinhood to the overwhelming complexity of thinkorswim. We've looked at platforms for long-term investors, for community-focused traders, and for data-driven professionals. We've covered the good, the bad, and the ugly of the most popular platforms in the United States. And that brings us to the final, most important question. After all of this, which one is actually the best? The answer isn't a single name. The answer depends entirely on you. And in our final part, we're going to put it all together. We're going to move beyond individual reviews and build a definitive framework, a decision-making matrix that will allow you to look at your own goals, your own personality, and your own trading style, and know with absolute confidence which one of these platforms is the right choice to help you build your future. Let's build that matrix right now. We're going to break this down into two fundamental questions. First, who are you as an investor? And second, what do you value most in a platform? Get the answers to these two questions right, and your perfect platform will reveal itself. Let's start with question 1. Who are you? I see 4 main archetypes of investors, and you're likely one of them or a blend of 2. First, there's the absolute beginner. You've heard about stocks, you're ready to start, but the entire world of finance feels like a foreign language. Your biggest enemy isn't a bad stock pick. It's intimidation. It's the fear of pressing the wrong button and losing your money. For you, the primary need is simplicity and a gentle learning curve. You need an app that feels less like a Wall Street terminal and more like an app you already use every day. This is the kingdom of Robinhood. Its interface is masterfully simple. It removes the jargon, it makes buying a stock as easy as ordering a pizza. Webull is a close second. A bit more complex but still very mobile-friendly. The key for the absolute beginner is to remove friction. You need to get from "I want to invest" to "I own a piece of a company" with the fewest possible steps and the least amount of anxiety. Fractional shares are also your best friend, allowing you to invest with just a few dollars. Both Robinhood and Fidelity offer this, but Robinhood's user experience is built from the ground up for you. Second, we have the passive investor. Your mantra is, time in the market beats timing the market. You're not looking to get rich quick. You're playing the long game, building wealth slowly and steadily over decades for retirement, for your kids' college, for financial freedom. You plan to buy broad market ETFs like VOO or VTI, maybe some blue chip stocks like Apple or Microsoft, and then you want to forget about it for a while. Your needs are rock-solid reliability, low costs, and access to great long-term planning tools. You don't need fancy charts. You need a fortress. This is the domain of the Titans, Vanguard, Fidelity, and Charles Schwab. Vanguard is the spiritual home of passive investing, built on a philosophy of low-cost index funds. Their app isn't flashy because it doesn't need to be. It's a vault. Fidelity and Schwab offer a bit more, combining that same reliability with some of the best research and educational resources on the planet, all for free. For the passive investor, the platform is a utility, not a toy. You want the one you can trust with your life savings for the next 40 years. These 3 are the gold standard. Third, there's the active trader. You see the market as a dynamic, living thing. You're not just buying and holding. You're looking for opportunities, maybe swing trading over a few weeks, or even day trading over a few hours. You speak in terms of support and resistance, moving averages, and MACD. Your needs are completely different. You require speed, precision, and power. You need advanced charting that lets you draw trend lines and add indicators. You need complex order types like trailing stops and bracket orders. You need real-time data that doesn't lag. And you need low costs on options contracts. This is where a platform like Webull starts to shine over Robinhood. offering more robust charting and paper trading. But the true king in this space for the serious retail trader is thinkorswim from TD Ameritrade, which is now part of Schwab. Thinkorswim is the F-22 Raptor of trading platforms. The learning curve is steep, but its capabilities are almost limitless. It's a professional-grade tool given to you for free. For traders who need even lower costs and direct market access, Interactive Brokers is the next step up, but it's geared more towards semi-professionals and those with significant capital. Finally, we have the Data-Driven Analyst. You're a value investor at heart, a student of Benjamin Graham and Warren Buffett. Before you buy a single share, you want to read the 10K, analyze the balance sheet, compare the PE ratio to its competitors, and see what every analyst on Wall Street is saying. For you, the platform is not just a place to execute trades. It's your primary research library. A simple interface is nice, but it's worthless without deep, reliable data. This is where Fidelity and Charles Schwab absolutely dominate the competition. The sheer volume and quality of the third-party independent research they provide to their clients for free is staggering. We're talking reports from firms like Argus, Morningstar, and CFRA that would cost you hundreds or thousands of dollars a year to subscribe to directly. They provide stock screeners with hundreds of criteria, allowing you to filter the entire market down to a handful of companies that meet your exact specifications. For the data-driven analyst, choosing any other platform is like trying to write a PhD thesis using only Wikipedia. You need the primary sources, and Fidelity and Schwab give you the keys to the entire library. So, identify yourself. Are you the beginner, the passive investor, the active trader, or the analyst? Once you know that, we move to question 2. What do you value most? If you value above all else a beautiful, intuitive user experience, if the thought of a cluttered screen makes you anxious, you are prioritizing design and simplicity. Robinhood is the undisputed champion here. Webull is a close second. They are mobile first, clean and fast. They feel modern. If you value research and education, if you believe that knowledge is the ultimate investing advantage, and you want to learn as much as you possibly can, you are prioritizing depth of information. Fidelity and Schwab are in a class of their own. The educational content, the webinars, the articles, and especially the professional-grade analyst reports are simply unmatched in the free retail space. If you value powerful tools and customization, if you want to be able to tweak every chart, set up complex multi-leg option strategies, and have access to every technical indicator imaginable, you are prioritizing capability. Thinkorswim is your platform. It's not the prettiest, but it's the most powerful. It's the ultimate trading sandbox for the serious enthusiast. So now let's put it all together. This is the final matrix. If you are an absolute beginner and you value a simple, non-intimidating experience, your choice is Robinhood. It will get you in the game with the least amount of friction. If you are a passive investor focused on the long term and you value trust, reliability, and low costs, your choices are Vanguard, Fidelity, or Schwab. You can't go wrong with any of them. Pick Fidelity if you also want a great checking account and credit card all in one place. If you are an active trader and you value powerful tools and charting to execute your strategies, your choice is Thinkorswim. Download it, commit 2 weeks to learning its interface on a paper trading account, and you will have a tool that can serve you for your entire trading career. If you want a mobile-first experience with a good balance of tools, look at Webull. If you are a data-driven analyst and you value deep research to find undervalued companies, your choice is Fidelity or Schwab. The access to institutional quality reports they provide is the single biggest hidden value in the entire brokerage industry. And what if you're a mix? What if you're a beginner who wants to be a data-driven analyst? Start with Fidelity. Their app is simple enough to get started, but the deep research tools are there waiting for you when you're ready to learn. What if you're a passive investor who also wants to actively trade a small portion of your portfolio? You can do that. Open a Schwab account for your main portfolio, and also get access to Thinkorswim for your trading. You don't have to be married to one platform. The biggest mistake you can make after watching all of this isn't picking the wrong app. The biggest mistake is letting the paradox of choice paralyze you into doing nothing. Every single platform we've discussed will allow you to buy a share of an S&P 500 index fund. Every single one can be the vehicle that takes you from where you are now to where you want to be financially. This journey we've been on, this deep dive into the world of trading apps, was never really about the apps themselves. It was about finding the right tool to help you build a better future. The app is just the hammer. You are the architect. The perfect platform doesn't exist, but the right platform for you right now does. Your goal for today is not to find the perfect app for the rest of your life. It's to find the one that's good enough to get you started. Because the single greatest force in investing is not stock picking, it's not fancy charting, it's compounding. And compounding cannot begin its magic until you put your money to work. The most sophisticated trading platform in the world is worthless if it sits on your phone, unfunded and unused. The simplest app, used consistently, can build a fortune. So make a decision. Pick one. Download it. Link your bank account. And start. Start small. Start with an amount you're comfortable with. Buy a share of a company you believe in, or an ETF that tracks the entire market. Feel what it's like to be an owner. The best platform is the one you actually use. The most important trade you will ever make is the very first one, because it's the one that changes you from a spectator into a player on the field. The question was never really, which app is best? The real question is, when will you decide to begin? Your future is waiting for you to answer.